Hello guys, welcome to our channel. The videos we make on this channel focus largely around various types of investments like ASX stocks, US-based stocks, as well as cryptocurrencies such as Bitcoin or Ethereum. We analyze and look at various other analysts and figures in the space, look at how they are valuing investments, and analyze and predict ourselves.
I'm still a huge advocate for the potential of blockchain and cryptocurrencies. I'm disappointed, like many other shareholders. It sets, in a way though, I always try and find what is the outcome of something like this. I mean, yes, I'm a shareholder in the international. That's a zero. It's not the first time I've made a bad investment, probably not the last time, but luckily I make more good ones than bad ones, and I learn from my mistakes. What's going to happen now is there won't be another situation like this for institutional investors ever again. We're simply not going to put capital to work until this stuff gets regulated. And what is occurring, and I'm just one voice in it, what I'm going to be doing is I'm going to fly to Washington and I want regulation. I want it now. No more delaying. I think this puts tremendous pressure on the SEC. I think a bill like the Stablecoin Transparency Act, which has been floating around forever, not going to signature, not going to markup, we got to stop doing this to ourselves. As an industry, it has to stop, but also it's time to move forward with regulation. And this is the bottom of the crypto market. A massive player goes to zero, and now you build from the ashes. That's the upside. I am still going to invest in crypto. I've lost money in the accounts there. They have a gate on them now. It doesn't stop me from buying more, and I'm going to do just that. I'm going to take advantage of the fact that most of these currencies and tokens and coins have absolutely been beaten into the ground as a result of this, and probably a buying opportunity. That's the way I look at it. I'd like to start with one thing. I don't think we can solve for every single asset in crypto. I want to do one thing, and that one thing is to pass the Stablecoin Transparency Act. One thing. Because that allows us to use the US dollar as a payment system. I would use that in all of my businesses every day. It's far superior to ACH, far superior to SWIFT, far faster, more transparent, 100% audible. All I need is the regulation that forces an audit every 30 days and guarantees me the backup for this is treasury bills less than 12 months of duration. That's one thing. Very simple. That would signal to everybody around the world that regulators here in the United States are taking crypto on, starting to put rules in place, putting the guardrails on. No one is going to play ball anymore in this space on an institutional level with serious capital till we get it done. I'm going to agree. It was a terrible investment, 100%, and I lost my money. I get it. I'm a diversified investor. I make mistakes. This is one of them. But I learn from my mistakes. This won't be happening again. If I'm going to put serious capital to work in a broker-dealer, in an exchange, it's going to be one that's regulated, that has transparency, and has the same rules of test every other exchange that deals in stocks and bonds has. Because, you know, everybody's saying the same thing. It's great to be a retail investor and trade a few $1,000s worth of crypto. And if that's what Binance is going to do, good for them. But every single institutional investor is going to look at this and say, okay, can't play with this structure anymore because there's not enough transparency. I'm going to wait for the SEC or whoever it is going to be, the Fed or whoever, to regulate this stuff. This is actually a turning point for this industry. It's a maturation for this industry. That's what's going to happen.
Leverage and idiot managers combined together. Because what happened here is 5, 6, 7, 8, 9 times leverage on platforms run by managers who have never had experience with an asset class like this. And all of them are wiped out. And that's a good thing. Right. All of these bankruptcies you've seen are a result of leverage. And it's very important that you take the idiot managers and get them out of the equation. All the idiots are gone. And what's left are managers that understand the volatility of Bitcoin and the risk inherent with leverage. And so those days are gone forever. Also, these algorithmic stable coins gone forever. 60 billion erased. It was decentralized, so it wasn't just in the US, but all the idiot managers are gone, and that's a great thing. And I would argue that the industry is much stronger for it with the idiots gone.
Are you looking to get into Bitcoin right now, or is right now a kind of a time where you'd say, I think that we're close to the bottom, but I'm not really sure, so I'm going to hold off? What does that look like from an investor standpoint?
Well, let's take that question in two parts. Let's deal with crypto first, all right? And then we'll talk about the stock market. We can even talk about the bond market. I play in all three of them. The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. You've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says or you individually have to comply to. Because if you're going to do that, you're going to get the tax loss benefit harvested in 2022 and still keep on a position in crypto. Now, here's the debate, because I just before we got on together was talking to my operating trading desk about this. There's an intrinsic assumption right now that Bitcoin is a good proxy for any crypto. It's really hard to see some project moving north of Bitcoin gains if Bitcoin's going to be stayed stuck in a trading range of 19 to 22,000. Now, the assumption I'm making, and I'm giving you a lot of detail here because it's food for thought for everybody that's trying to make this decision.
Before we continue, click that YouTube like button and subscribe to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring, and now let's continue.
Over the next 6 weeks. If you're going to harvest your losses, you basically have to December 15th because things could get thin after that. I'm talking US domestic now. I'm looking at these positions every day and saying, okay, let's take off that Polygon position, or let's trade that Polygon position for the next month into Bitcoin and go through the tax period and then reposition at a new price, a new ACB average cost base, because this is the first year that everybody's worried about the IRS. The IRS didn't give a damn about this 2 years ago. Now they do. Even my own auditors, even our compliance department is saying, Kevin, what are we doing with our crypto portfolios? What's the plan? Let's go through every single position and harvest our tax losses. Now, I don't think Bitcoin is going to trade past $22,000 until we get policy, but it doesn't have to be Bitcoin policy. It has to be any policy, which gets full circle back to what I was talking about with the Stablecoin Transparency Act. Give me that policy. I want to be long Bitcoin when that hits, if it gets cleared into law, and Katie bar the doors, because institutions are going to smell the same thing. And the asset that they want, if you could pick, let's say, 4 positions, I'll tell you what they would be in my view from an institutional client. It would be Bitcoin, it would be Ethereum, it would be Polygon, and USDC as a payment system. You could get full exposure to the volatility of crypto with just those 4 positions, with the stability of your payment system being USDC. And I think that's what's going to happen. You're going to see a rise in those positions almost immediately. It doesn't mean Solana's not good. It doesn't mean there's other projects you shouldn't own. But if you want just a core holding into legislation, I'd recommend those 4. The number 1 issue around crypto right now is policy. Number 2 issue, policy. Number 3 issue, policy. And I'll tell you why I say that. I represent and I'm very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I asked them, well, what would you want in that? They said, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None. 0. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns 0 crypto. If they could get their hands on it, they would buy Bitcoin, which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF where the underlying is Ethereum. But the institutions won't buy it because their compliance departments do not allow them to own it because there's no policy in the US. So my whole investment thesis here is you go long Bitcoin and you wait, because you either have to do it after this policy, in which case you probably leaves 20 to 30% price appreciation on the table, or you go in now and you simply wait. But I'm telling you, you're not going to get past 22,000. It's going to be stuck in this range for quite a while until we get policy. Step one in 2023, bipartisan bill legalizing and regulating stablecoins backed by the US dollar and treasury bills. 100% that's going to happen. I may get the timing wrong by a few months, but the reason that would happen is in the economic warfare we're getting involved with in China, where the Chinese are trying to digitize their currency. I would never own that currency. I would never trade it. I would never even put it on my blotter, ever. I would never do anything with that. I need something that is backed the faith of the US dollar and regulated. And that would be a stable coin that's audited every 30 days that has either one-to-one with the US dollar or any treasury bills in it are a duration less than 12 months. That's what the act says. It's a very simple act. If that happened, you could see USDC, like Circle, for example, wouldn't be the only one, but that would become a very powerful platform for everybody all around the world. More transparent, much faster, lower cost, completely efficient and productive. And it would be effectively making the US dollar the default currency worldwide. That happens first. That's stage one. Then the Digital Commodities Act, we look at that for trying to figure out what we're going to do with Bitcoin and everything else on the blockchain, including NFTs, to use them for authentication in all of the 11 sectors of the S&P. That's how it's going to happen. Stablecoins first, then Digital Commodities Act. And these things will move forward at their pace based on how fast Congress can deal with them. But at the end of the day, there's no question in my mind why you should own some portion of your portfolio, should own crypto, is because of this march forward on policy. This is actually going to happen. And if you don't own this, here's a problem you've got. There's two risks in the market. There's the risk of owning crypto, but there's also the risk of not owning it. There's a reason Jamie Dimon is going nuts on Capitol Hill. He knows that when he is taken into competition with something like a stable coin, the fees he makes on transferring capital, on his ACH transfers and his SWIFT transfers between countries and geographies, he's going to get killed. He can't compete with how inexpensive it is to use a digital currency like USDC. And so whatever value is now held in JP Morgan stock will get transferred to something like a Circle. So if you don't own any Circle, you're going to miss out on that transfer. That's why crypto will become the 12th sector, the S&P. That's the risk of not owning it. So you need diversification in any sector. There's a rule that plays out in sovereign wealth and indexing, and it's a very simple rule. It says no more than 20% in any one sector, no more than 5% in any one position. So you can apply that also to crypto. So if you had $50,000 and you were going to decide, look, I want exposure to the crypto market, break it up into $10,000 chunks and buy 5 positions. So it would be definitely Bitcoin. It would definitely be Ethereum. Polygon reduces gas fees. It's a very interesting platform and has lots and lots of apps on it, which is what you need to be a profitable chain. Then USDC is a payment system for sure. And then take a flyer on something like Solana, or something that is attempting to speed up transactions. And that's enough diversity. But they all trade, with the exception of stable coins, which are stable coins when they're backed by the US dollar, in tandem right now to Bitcoin. Bitcoin is the granddaddy, and it's the one that most institutions want to take a position in. It's a storage of wealth. I'm not sure I'd use it as a currency. I keep telling everybody, Bitcoin's not a coin. Polygon's not a coin. USDC is not a coin. It's not. Polygon's not a coin. It's all software. And if you think Microsoft added value to the economy or any of the other software platforms, you would be right. So you should start thinking about crypto as being software that's extremely productive for financial services. That's the way to look at it.